Hello everyone. Let's continue our chapter with the objectives of financial management. Hello everyone. Let us continue our chapter with the objectives of financial management. The objectives of financial management is to maximize the shareholders' wealth, or we can say that it is the wealth maximization concept. No doubt, financial management is concerned with the business, and business objective is to maximize the profits. But here we are concerned with the long-term profit maximization of the shareholders, which is known as the wealth maximization concept. A company form of business is there, and in a company form of business, shareholders, they play a important role in the funds arrangement of a company. Basically, these are the owners. But if you remember that shareholders have invested the funds, all the shareholders, they are not involved in the management of a company. Who are involved? Just the board of directors. A few persons are among all the shareholders, they are involved in the management of a company. And what should be their objective? Their objective should be to manage the funds in this way so that the market price of equity share increases. And if a market price of equity share will increase, definitely the wealth of shareholders will be automatically increased. And how the company will be able to increase the market price of equity shares? Then the company will be able to increase the market price of equity shares when the decisions will be taken in this form that the benefits are increased in from the cost involved. Means whatever any decision is to be taken, the cost involved in that decision and the benefits from that decision will be increased. And definitely the shareholder would like to gain from these decisions. If the decisions are taken in this form, that where the benefits will be lesser and the cost will be more, definitely there will be a decline in the share price. Means कि कंपनी ने अगर कहीं कोई बिजनेस को एक्सपैंड करने का डिसीजन लेना है, the question is where to invest, in which form of business organization or in which product the company can expand its business. If the company has chosen for the wrong product and the product is not being sold in the market, definitely the decision will not be a good decision will be a bad decision, and there will be a decline in the share prices of the shares, and which will lead to poor financial decision. If the company, as nowadays there is a need to there is a time when we can better invest in the technology. कुछ इस तरह का बिजनेस, लैपटॉप्स में की सेल इंक्रीज हुई है, मोबाइल फोन्स की सेल इंक्रीज हुई है, पर्सनल if you observe that due to this COVID-19, that you people are not able to physically go to the school. The school is at your doorstep. इसके लिए you need laptops, you need mobile phones. तो आज की डेट में ये बेस्ट अपॉर्चुनिटी है कि मैं इन चीज़ों में इन्वेस्ट करूं, तो आई विल बी मोर सक्सेसफुल. सो whenever a decision is to be taken, the decision will be taken to maximize the shareholders' wealth, and it will be taken, such kind of decision will be taken where the benefits from the decision exceeds from the cost involved. In this way, the wealth of the owners will be maximized. The three financial decisions which a financial manager has to take, that is investment decision, financing decision, and the dividend decision. We will study about these three decisions in detail. The first one is investment decision. Means when a company is being started, lots of funds are there in the hands of company. Now the question is, where to invest these funds, where to invest these resources so that one may get the highest possible return for their investment. So there are two options. What are these two options? That these funds can be invested in the long term as well as short term investments. A long term investment is called a capital budgeting decision. A long term investment decision is called the capital budgeting decision. Means किस प्लांट में, किस मशीनरी में पैसा इन्वेस्ट किया जाए, मनी इन्वेस्ट की जाए कि वहां से मैक्सिमम प्रोडक्शन हो और फिर उस मैक्सिमम प्रोडक्शन के थ्रू मोर बेनिफिट्स अचीव किए जा सके. So this is one of the most important decision, and investment in long-term decision or the capital budgeting decisions will definitely affect the size of assets, profitability, and competitiveness. You can get this question that name the decision which is going to affect the size of assets, profitability, and competitiveness. So when we will think about the capital budgeting decisions, the capital budgeting decisions would bring the concept of investment in fixed asset as well as will bring the concept of investment in plant and machinery to our mind. Means when a business takes the decision that this much amount will be invested in the this much plant and machinery, that means company has taken a capital budgeting decisions for the long term, because the fixed assets give us a long term returns, right? The next one will be short term investment decision. The short term investment decisions are also called the working capital decision. Like long term decisions are called the capital budgeting decisions, the short term investment decisions are also called the working capital decisions. Working capital means current assets minus current liabilities, and current assets are cash, inventory, and receivables, and the current liabilities are bills payable, creditors, etc. Means a financial manager has to decide about how much in cash should be there every time in the business, how much inventory should be there, and how much will be the level of receivables. And these decisions, the short-term working capital, short-term investment decisions or working capital decisions will affect the liquidity as well as profitability of a business. Now, the factors affecting capital budgeting decisions. Capital budgeting decisions, that means investment decisions. Investment decisions were related to two aspects. One was investment in long-term assets, fixed assets. Other one was investment in short-term, or which was known as the working capital. So factors affecting capital budgeting means I am considering here the factors which are affecting the long-term, that is fixed asset investment in fixed asset decisions. So first one is cash flows of the project. Cash flows of the project means, flows means change. Cash flow, change of cash, that might be inflow, that might be outflow. Means when a business or a company wants to invest in the fixed asset, definitely a huge amount is involved in investing that fixed asset. So definitely one will expect the larger amount of cash generations also. Okay, when one is expecting the cash generations of huge amount after spending a lots of amount on the asset, so this factor is to be considered. A pre-idea or a budget or a expected count should be there for the cash receipts and cash payments. Means what may be the cash receipts from the project a company is going to invest, and what will be the payments for investing in a particular asset. That should be analyzed. Definitely cash receipts should be more than the cash payments, so this factor should be carefully analyzed before considering a capital budgeting decision. The next one is rate of return. The rate of return, if I will say, that is amount of profit. In a layman's language, a amount of profit. Whatever amount is being invested in the fixed asset, what return it will be providing. That, as I am saying, there will be cash inflow as well as cash outflow. Then at the end of year, that there a change will be noticed, or at the end of a particular time a change will be noticed. This will be considered as a positive change, will be considered as a return on the investment. So every businessman or every large organization, while it is going to invest in the fixed asset, so it has to make some calculations. That calculations will be based on expected returns from each proposal. Each proposal here means that a company is not going to invest in a single asset. Company has to invest in the various assets, and the assessment of risk is also to be done. So this can be quoted with the example that company has selected two projects, and where the one project is giving a return of 10% and other one is giving the 12%. So definitely the company will select those projects where the return is more, that is 12%. The next one is investment criteria involved. There are the various methods to calculate the return, as well as what will be the criteria, that is what will be the purpose of investment. If the investment in fixed asset is to be done for the purpose of production, or it is to be done for the purpose of just resale. So there are the various methods or various criterias where the which are involved in the investment decisions. So the amount of investment, interest rate, cash flows, and the rate of return, these are the different techniques which are helping in evaluating the investment proposals, that you will study in the higher classes and later on. So these techniques are to be selected for a particular project. So it is all for the day. We will go for the next decision in our next slides. Thank you.